Alright guys, I'm back with another YouTube video today, and today's YouTube video is going to be going over how I lost $370 today trading Nasdaq. Now, today was actually a very complicated day, so if you did take a loss, completely ease off the gas pedal because you're fine. Don't stress out a little bit too much. A lot of people got cooked today. Now, honestly, there's statistical losses and then there's losses that are due to you and your psychological issues. I'm not gonna lie, I low-key think I could have prevented this trade, and I could have probably not taken L today, even though I did minimize my risk. I compared to my wins, they're usually above 1.5k, and I only took a $370 loss. That's completely fine for me, at least. But a lot of people actually blew their accounts, blew their fundeds and everything. So it really does depend on your circumstance. But I do think it was easily avoidable, and I'm gonna go over why I think that. Even though it was a confusing day. So first, starting off with bias, I notified Discord that I'm looking to short because we already retraced high time frame. Now, what I meant by that is this is the 1 hour chart before market open. So as we see, we are looking pretty bearish currently over here. We are overall on the 4 hour or overall in a bullish trend. However, the reason why I say we are bearish is because right here we have a 1 hour fair value gap, and we actually go and tap into that fair value gap, get a nice rejection lower. Followed by that, we get a nice 1 hour displacement lower. So we, number one, have tapped a high time frame fair value gap, and we've also displaced out of it. It only makes sense to hit this draw or this draw over here, and we have a bunch of low resistance liquidity stacked up that needs to be taken in order for market to proceed higher. So this is why I would say I typically only wanted these, and if we did retrace very deep, then we can also tap into this 1 hour fair value gap. So quickly, market opened. Obviously, it opened bullish. We had two bullish candles over here. We had two bullish candles at market open, and those two bullish candles actually tapped into this 5-minute and 15-minute fair value gap. So this gave me even more conviction on this trade because I'm like, okay, perfect. Number one, we retraced into a semi-high time frame, 15-minute gap, and now out of that gap, we get this very strong. How many points is this? Literally almost 50-point displacement candle, proving that we want these confirmed lows below. Now, obviously, this is a plus trade in my books. This is literally my full strategy. I entered obviously right here, targeting this. Okay, wait, low-key, let me remove these so you guys can see it clearly. I enter right here, targeting this, the draw on liquidity. This is a perfect entry in my opinion. 15-minute gap tap, displacement. 9 out of 10 times I'm going to be in this trade. Even if I know this trade is not going to win, I would still be in this trade. This is literally my full strategy. So if this one is actually a strategical loss, so it's actually statistical. We actually pull down lower, and I do go break even at internal lows. I don't really have a playbook on when to go break even. I don't really like going like that. I think break even is more discretionary. You need to go based off your experience and your judgment in the market. So I can't really say you're supposed to go break even like at a specific spot, but usually it's around the internal low. So if you went break even here, for example, you probably got cooked because it didn't reach there. Luckily, I went break even over here. The second we took it, I instantly went break even. Break even, obviously, we came back up and tapped my stop loss since we were break even, and boom, just like that, I lost that trade, and I made like 12 bucks on the trade or something. So that was the first trade I took. And wait, let me show you guys also the full thing. This was the full screen. $367.40 I lost. Just because it is Asia already, so it doesn't show the PNL anymore. But yeah, so that was the first trade I took. So now immediately it's kind of suspicious to me as to why we didn't take this draw. There has to be a reason. We did actually have a SMT at these highs with ES, so that could have been actually playing a role. I don't really use SMT in general, so I didn't really care about that. But whatever, that's the first trade I took. The second trade I took was, let me see, move this one out of the way. So there was one of them was this. I remember this one, and then I also took this one right here. So this is the second trade I took. So now we obviously came and retraced into this tiny 1 minute fair value gap. Now this added even more conviction. I'm like, okay, maybe that didn't work out because we needed to retrace a little bit more. We retrace back into this 1 minute fair value gap. We actually hold the fair value gap, and we get another displacement candle lower. So now this is like proving me even more that we actually want to take these lows. I'm like, okay, it's fine. You can always re-enter and always win the position that way. I didn't lose money the first trade. I was break even, so it's whatever. I'm fine taking another trade. Usually I go based off one trade per day, but that's typically if I don't go break even. It's either a loss or a win. So this was another great trade. I entered mid candle over here off this nice displacing candle, and I was so ready for it to go and hit take profit. But again, I went break even at this low. Second we passed it, and again we flipped higher. So now going break even saved me 2 times already. So I'm kind of happy that I went break even and I saved myself, but at the same time, I'm really confused of why we're not taking these draws. So now at this point, it's honestly concerning to me what's happening in the markets. So then there was also this trade over here, which I entered over here. It was somewhere about here like this. So this trade, again, similar to the past 2 previous ones. Literally, we do get these like decent bullish candles going higher, which kind of I didn't like. But since we got these nice displacing bearish candles, again, it proved me that we do want to go lower still. So again, I enter this trade over here, stop loss at these wicks over here, take profit at this draw on liquidity over here, which was just a 1 hour low. And again, I don't have a break even point now because the break even would obviously be all the way down here. Realistically, if I want to go break even at internal low, because there's still a fair value gap here that we need to displace through. I can't just go break even in the middle and just, lose the trade and then it rushes to my TP. So whatever. I'm like, whatever happens on this trade. Honestly, I just de-risked just because I did take 2 break evens. Kind of market didn't seem like it was delivering correctly. So I did go in with 5, I believe 5 or 3 micro Nasdaqs. I'm not honestly too sure if it was 5 or 3, but it was one of those. Usually I would go in with at least 1 mini. So I entered over here, and obviously there you go. Like, the second I entered, the price just went up and it just cooked me. So pretty much price just got cooked. And that's how I took a $370 loss today. Now I'm gonna go over why I took this loss, and why it's not a statistical loss, and why my model didn't not present itself. It did present itself, and it actually did work. I just didn't enter properly. So I'm gonna go over that, and then I'm going to show you guys the one trade I really do believe was a great trade today, even though with all this confusing biases. So the reason why, oh my god, did I delete it? Oh no, it's right here. So the reason why I believe all 3 trades didn't actually take and flush all the way to my draw on liquidity, and I actually didn't win those trades. Number 1, the 5-minute was ranging. So when I did enter the trade, honestly, I'm gonna be so for real, I didn't even look at the 5-minute. The 5-minute was already ranging. So that's number 1. If the 5-minute is ranging, in general, you do not want to enter a trade if 5-minute or 15-minute is ranging. Ranging market just means literally like this. We're going to play ping pong with price action. We're going to go up and down. And that's exactly what I got caught in, and kind of tunnel visioned on shorts only. So that's the first mistake I have done. 2, the draw on liquidity was taken by ES. So this draw on liquidity over here was taken by S&P 500 first, and obviously they're correlated pairs. If one pair takes it, technically the other one does not have to take that. Honestly, and that's the one thing. Even though it's still a valid draw on liquidity on Nasdaq, the reason why it's more of not really a prominent low to target is because since ES took it, practically it could just flip up, because it could just SMT the lows and just flip up back upwards, and we could go to the highs. But that's literally the one thing I noticed that. I just didn't really care about it because I don't really use SMT that much. But yeah, that's also a factor that could play into it. And 3, Nasdaq failed 3 times to deliver to the lows. So if Nasdaq is failing 3 times to deliver to the lows, there has to be a reason. Whether it was the SMT, or it was because of the ES, or it was because of the raging marketplace. I don't know which one it was from, or maybe all 3 of them combined together. But that's my bias on why I think I actually lost these trades and why I took this loss. Obviously, that's the only way you're going to get better. Every single trader loses, whether it's statistical or psychological, it doesn't matter. At least you're going to have once every at least month or every year, you're going to have a slip up by yourself, even if it's not your statistical loss. Even though my win rate is pretty high, I haven't taken a loss honestly in 2 months or a month and a half. And if I am taking a loss, this was actually my first full loss that I admit that I'm actually wrong, and it wasn't a statistical loss. It was actually a wrong because of my fault. But yeah, let me go over the trade I believe actually was a great trade today. So I did also notify Discord when we were pushing higher that we can also go to this no wick candle draw. So a no wick candle draw is actually a very good draw. Okay, so this is exactly what I mean by a no wick candle draw. So these are honestly very good draws on liquidity. Literally 9 times out of 10, I feel like, at least from my experiences, they hit. And it's this candle over here. As you see, there is absolutely no wick at the top. It's just a flat candle, none of these wicks. And how you can tell also if there's a very tiny wick, if you put your tool on it and you have your magnet on, and then you look at the open, high, low, close at the top. So for example, right here, like right here, we could see the open is 25,692 and 25, and the high is 25,692 and 25. So this is how you know where the price opened and where the high was is the same. If it's the same number, that means that it's a no wick candle, or else it would be like this. See how the open and the high is different? That's how you kind of tell if it's a strong draw, if it's the exact two numbers over here. So whatever, that's pretty much the draw I was saying. That was really good. So after this move right here, after we got this bearishness, we literally had a V-shaped recovery with a nice bullish candle. So this entry, in my opinion, would be ideal and perfect, targeting this, and it actually would have played out perfectly. This is like an A+ entry as well. Technically kind of a reversal type of trade, but it doesn't really matter. Honestly, it was a very clean trade. Now, the reason why this is a good trade, number one, we have a V-shaped recovery. We invalidate this 1 minute fair value gap, proving that we do want the highs, followed by a nice displacement candle towards that draw on liquidity. Two, we have a very strong draw on liquidity. No wick candles are very strong draws on liquidity, so it's very prominent that market usually wants to go there. Three, we did fail to deliver to these lows 2 times, so that's proving, actually 3 times, so that's proving you that we probably want the highs. 4, ES took the draw on liquidity, so practically we don't need to go lower in order to move higher. And that's pretty much the reasonings for this trade. If you took this trade, good job on you. That was actually a very good trade. I personally did not take it because I already took a $370 loss. And sticking to my rules, I only take 1 trade per day, whether it's a $1,000 loss or a $500 loss, whatever the case is. However, there was also this type of trade. If you took this as well, this was also very good. This was another great trade off this nice rejection over here. As you see, this wick came all the way down here. Buyers pushed it all the way back up here. Price closed over here. Enter off that candle. Boom. That's TP hit as well. Perfect. Literally not even one retrace. Straight flush to the take profit. But yeah, overall, this was a full explanation as to why I lost the trade today. And you guys probably learned a lot of things in this video as well. Overall, I have a completely free Discord that I give out my free daily signals and draws on liquidity out to. I have a full trading glossary that teaches you guys every single trading term completely for free. And yeah, that's pretty much it for today's video, and I'll see you guys in the next one.